In this video, we will look at why Tesla stock isn't rising right now, what the roadblocks are, and if the massive electric vehicle manufacturer will be able to maintain its dominant position. Stay tuned and let's see what happens. But first, if this is your first visit to our Smart Stocks Academy channel, please accept my warmest greetings. Hit the like button, subscribe, and click the notification bell next to it to be the first to know when a new video like this is released. So if you're ready, let's get to the topic. While other electric vehicle manufacturers are struggling to break even and find their footing in the market, Tesla is a seasoned veteran. On the back of record deliveries and the Biden administration's commitment to make electric vehicles a key feature in its climate change plan, its stock has surged during the pandemic. Investors anxious to join in on the electric vehicle action poured money into Tesla stock, helping the firm reach a $1 trillion valuation. But in 2022, the stock has reversed its trend. Tesla stock has been falling since the beginning of the year, despite the fact that the firm has record deliveries and analysts have sent gushing letters of recommendations. For starters, Tesla is postponing more Model X orders, as Elon Musk concedes that the company made a mistake in shutting down manufacturing of the prior versions, and that the current version's production ramp is experiencing issues. The Model X was not produced for around 8 months as the car maker revamped both the Model S and Model X programs, focusing on Model S manufacturing initially. After the updated Model X was introduced in January 2021, the manufacturer continued to take orders for the new Model X, also known as Palladium. Tesla already had a backlog of orders for Model X before the refresh was unveiled. As a result, many consumers who ordered Model X's over a year ago are still waiting for the cars and are frequently facing more delays. Tesla was providing Model X purchasers more clarity with better delivery windows a few months ago. Many buyers, however, are alleging that Tesla has offered a new hazy explanation for many of these delivery dates. Tesla revised delivery windows until the second quarter of 2022, according to numerous buyers who are a year into their Model X purchases. We anticipate that if this trend continues, many customers and investors would be disappointed. And negative investor sentiments is never helpful for a company. The bad news has been stacking up for a time now, with Tesla stock dropping more than 11% in trading after the firm announced it will stop producing new models in 2022 and would not be working on the much anticipated $25,000 electric car. This was not at all what many people expected. Elon Musk announced the news to shareholders during the company's fourth quarter result calls in 2021, stating that the company is still battling with semiconductor shortages that are likely to last the rest of the year. The news dashed investor hopes that the Tesla would start delivering on its sci-fi-inspired metal pickup, the Cybertruck, which it unveiled in November 2019, and the Semi, a heavy-duty truck that it announced in November 2017. The earnings call resulted in an unwarranted large Tesla stock sell-off. While the electric vehicle sector has recently gotten a legislative boost, it has yet to gain traction to compete on an equal footing with gasoline cars. Tesla investors may have been turned off even more by the Fed's interest rate hike, which decreased the value of future earnings that are discounted back to the present in modeling values. There have been various speculations recently that the Fed will raise interest rates in 2022. So what exactly is this about, and what should investors expect? In reaction to the highest inflation in 4 decades, Federal Reserve President James Bullard said he supports hiking interest rates by a full percentage point by the beginning of July, including the first half-point boost since 2000. Analysts at Goldman Sachs said they would change their projection if more players join in, especially if the market continues to price in high odds of a 50 basis point shift in March. Goldman's shifts coincides with the former U.S. Treasury Secretary Lawrence Summers' comments that investors should expect the Fed to raise interest rates at all 7 of its remaining policy meetings this year, possibly by more than a quarter point all at once. Banks throughout the world are bracing for another round of aggressive Fed rate hikes. This indicates that if Tesla fails to adequately prepare for the interest rate hike, investors will have a difficult year ahead of them. And that's not even the end of Tesla's problems in 2022. According to reports, the The business is recalling 578,607 automobiles due to a potential issue with the boombox feature. According to the paper published by the National Highway Traffic Safety Administration, some boombox features may cause vehicles to fail to meet pedestrian warning regulations. The automobiles in question have external speakers that allow them to play a variety of sounds while in motion. The boombox feature of Tesla is also available through the vehicle's external speakers. This is the exact opposite of what consumers and investors wanted to hear. It simply indicates that if investor emotions deteriorate, more Tesla stock will be sold off. The major question today is whether Tesla investors should be concerned about all of these difficulties. The current price drop in Tesla stock may be a familiar screenplay for a long-term investor. The stock of the electric vehicle manufacturer has always been a risky investment, and the current price drop, while dramatic, was not entirely unexpected. According to analysts, the automotive company will dominate the future electric vehicle industry. Morgan Stanley, a longtime Tesla bull, just produced a note claiming that Tesla has no serious competitors. As we see Tesla's model rollout progress, car manufacturers and investors may need to reassess their electric vehicle strategies in terms of volume per unit, according to the business. The company's fundamentals are at the heart of its optimistic thesis. Tesla opened plants during the pandemic and discovered workarounds to the chip scarcity that afflicted the automobile industry, reporting record deliveries even as other car firms struggled to cope with the pandemic's challenges. Tesla CEO Elon Musk revealed during the firm's earnings calls on January 26 that the company plans to invest this year in research and development on a humanoid robot that will work in the company's factories. According to Musk, this has the potential to become more important than the automobile industry over time. Despite the stock's dip, many analysts remain bullish on Tesla, citing the company's leadership position in the battery electric car sector, which is growing and becoming increasingly competitive. Tesla continues to be one of the fastest growing companies in the automotive market on the full self-driving software. Goldman Sachs analysts reported that Tesla management expressed optimism about FSD deployments and sees software as an essential part of the company's future profit and value generation. While we remain cautious about how quickly the company can achieve full autonomy, given the industry's history of delays with fully autonomous vehicles, we believe Tesla is well positioned to be a leader in autonomous vehicles in the long run, given the broad range of technology and resources it is devoting to this area. In summary, many people still expect Tesla to be at the forefront of the electric vehicle business in 2022. So, what are your thoughts on this topic? Please let us know in the comments down below. And with that, today's video comes to an end. If you haven't already, hit the like button below to show your love and support for this video. Also, don't forget to subscribe to the channel and click the notification bell right next to it to be the first to know when a new video is posted. Thank you for taking the time to watch, and we hope you had a great time. We hope to see you in our next video.